Here's a summary of Intuitive Surgical's 2025 Q3 earnings call transcript, designed for clear, spoken delivery, introduction, and CEO's overview. Good afternoon, and thank you for joining us for Intuitive Surgical's third quarter 2025 earnings conference call. We're pleased to report on an excellent quarter driven by strong global procedure growth, increased capital placements, and rising utilization across all our platforms. CEO David J. Rosa highlighted the expanding global adoption of our da Vinci V system, noting significant customer interest and demand, particularly for upgrades and dual consoles in the U.S. Internationally, we've seen initial da Vinci V placements and procedures in Japan and Europe, marking important milestones. Overall, worldwide procedures saw robust growth, with da Vinci procedures up 19% and ION procedures surging 52%, leading to a total procedure growth of 20%. This growth was fueled by strength in benign general surgery in the U.S. and accretive growth in general surgery and gynecology internationally. System utilization, a key indicator of how effectively our installed base is being used, also showed healthy increases, 4% for the da Vinci platform overall, 35% for SP, and 14% for ION. The da Vinci V is proving its design intent, outperforming Xi in utilization within its first 18 months. We also saw a positive trend of increasing utilization in our multi-port installed base as the da Vinci V catalyzed upgrades. In terms of capital placements, we delivered 427 da Vinci systems, including 240 da Vinci V systems and 30 SP systems, alongside 50 ION systems. Demand for da Vinci V upgrades was a significant driver of domestic placements, enabling customers to enhance throughput and capabilities with advanced features like force sensing and surgeon autonomy. We're also excited to offer refurbished Xi systems to expand access in various geographies. Financially, customer adoption translated into strong performance, with 23% revenue growth and an impressive 30% earnings growth, reflecting our commitment to operational excellence. CFO's financial review. CFO Jamie E. Samathan provided a detailed financial breakdown. Our third quarter financial results were robust. Taking da Vinci and ION together, total procedure growth was 20%, with revenue growing 23% to $2.5 billion. Our pro forma operating margin stood at a healthy 39%, and pro forma earnings per share increased by 30%. The da Vinci business saw 19% procedure growth, with the installed base expanding 13% to nearly 10,800 systems, and average system utilization increasing by 4%. The ION platform continued its strong trajectory with 52% procedure growth and a 30% increase in its installed base to approximately 950 systems, complemented by 14% average system utilization growth. Outside the U.S., total procedures grew 25%, driven by strong da Vinci procedure growth in markets like India, Canada, Korea, and Taiwan, as well as solid growth in China, the UK, Italy, and France. The da Vinci single-port, or SP, platform demonstrated exceptional growth at 91% globally. On the capital front, da Vinci system placements increased 13% year-over-year to 427 units, with 240 of those being the new da Vinci V. A notable trend is the significant increase in trade-in transactions, largely driven by U.S. customers upgrading to da Vinci V, indicating a strategic shift towards adopting our latest technology for efficiency gains. Systems revenue grew 33% to $590 million. Leasing represented 54% of da Vinci placements, with leasing revenue up 33%. Service revenue also saw a healthy 20% increase. Our total revenue reached $2.51 billion, a 23% increase year-over-year. On a constant currency basis, Growth was also 23%. Recurring revenue continued to represent 85% of total revenue. Looking at our pro forma gross margin, it was 68%, a slight decrease year-over-year due to impacts from tariffs, higher facility and service costs, and a greater mix of Vinci V and ION revenue. Pro forma operating expenses increased 11% year-over-year, driven by investments in headcount and R&D. Pro forma net income for the quarter was $867 million, with pro forma earnings per share of $2.40. Excluding certain tax benefits, pro forma EPS would have been $2.28. We ended the quarter with $8.4 billion in cash and investments, having repurchased approximately 4 million shares during the quarter. Key financial metrics: revenue, $2.51 billion, up 23% year-over-year. Total procedure growth, Da Vinci plus ION 20% pro forma operating margin, 39% pro forma earnings per share, EPS $2.40, or $2.28 excluding tax benefits, cash and investments, $8.4 billion. Highlights: strong Da Vinci V adoption, significant demand for upgrades and new placements, driving efficiency gains. Global procedure growth, 20% overall, with particular strength in benign general surgery, U.S., and international markets. ION platform growth, procedures up 52%, demonstrating its differentiated value at scale. SP platform momentum, procedures up 91%, with increasing evidence of patient value. Increased system utilization, 4% for Da Vinci, 14% for ION, indicating effective use of installed base. Software enhancements, FDA clearance for Da Vinci V software updates, enabling remote deployment and new features like Force Gauge. Refurbished SHI strategy, offering refurbished SHI systems to expand access and address cost sensitivities. Clinical data validation, positive outcomes data presented at Intuitive 360 and in publications, especially regarding ION and force feedback. Commitment to quintuple aim, continued focus on improving patient outcomes, experiences, cost, and access. Lowlights: pro forma gross margin decline, a slight year-over-year decrease to 68% due to tariffs, facility costs, and product mix. Bariatric procedure decline, domestic bariatric procedures continue to decline at high single digits, influenced by GLP-1 medications. China market challenges, navigating a constrained and competitive environment with slower tenders and price pressure. Management's forecast for future quarters, 2025 outlook: Da Vinci procedure growth, updated guidance to 17 to 17.5% for the full year 2025. Pro forma gross profit margin, updated guidance to 67 to 67.5% of revenue for 2025, with expected tariff impact of 70 basis points. Pro forma operating expense growth, expected to be between 11 to 13%. Other income, projected between $350 million and $360 million. Capital expenditures, estimated to range between $625 million and $675 million. Pro forma income tax rate, estimated to be between 21 to 22% for 2025. Significant risk factors mentioned: international market dynamics, government budget challenges in Japan and the UK, and a constrained, competitive marketplace in China. GLP-1 impact, ongoing influence on bariatric procedures. Regulatory environment, while not explicitly a negative, ongoing FDA clearances are part of the business. Competition, healthy competition exists in various markets, particularly China. Tariffs and costs, continuing impact on gross margins. Key statements from management: CEO David J. Rosa. Q3 2025 was an excellent quarter for Intuitive Surgical Incorporated, with strength in worldwide procedure growth and capital placements, as well as increasing utilization across all platforms. Da Vinci V expanded. Globally, customer interest in and adoption of Da Vinci V expanded. We believe upgrades are an effective way for customers to expand throughput and capabilities. We are committed to our 2025 priorities. We are well-positioned operationally and financially to further increase value to patients, physicians, hospitals, and payers globally. Regarding the refurbished She strategy, Refurbished 11 is going to be an important part of that. Certainly for certain sites of care within the U.S., but also outside the U.S. CFO Jamie E. Samath. The third quarter was a strong quarter for Intuitive Surgical Incorporated, taking Da Vinci and ION together. Total procedure growth was 20%. Revenue grew 23% to $2.5 billion. Pro forma operating margin was 39%, and pro forma earnings per share increased 30%. Regarding going direct in Italy, Spain, and Portugal, we continue to expect that to be slightly accretive to pro forma EPS upon going direct. We ended the quarter with $8.4 billion in cash and investments, reflects the stock repurchases, partially offset by strong free cash flow of $736 million. Investor Relations Head Dan Connolly discussed clinical highlights, including a study on ION's diagnostic yield and another on force feedback's impact on reducing applied force in robotic thoracic surgery. Presented the updated 2025 financial guidance, emphasizing the positive trends and management's confidence in future growth. Conclusion: Intuitive Surgical delivered a strong third quarter, exceeding expectations with robust procedure growth and revenue increases, largely driven by the successful launch and adoption of the Da Vinci V system. While facing some margin pressures and market-specific challenges, the company remains confident in its strategic priorities and its ability to create value across the healthcare ecosystem, as evidenced by its updated financial outlook for the remainder of 2025.